Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. A quick glance across Asia will tell you that we're fairly well placed in the morning session. Nikkei 225 is up about 0.5%. Shanghai is up another 0.5%, with the Hang Seng trading marginally in the green. And so is the SGX Nifty near it's just another 8 odd points on the upside. Last week, interesting week, though we didn't manage to close in the positive. But Friday was a big session.
Yeah, a good session accompanied by the globe, which is looking okay, and the talks around the trade war or trade truce, however you want to term it, are not looking all that bad either.
Yeah, but you don't know, something today and something else tomorrow.
That's actually the main thing.
So you're just going to keep dilly-dallying in terms of tossing yourself between tweets to figure out whether it's going to be positive or negative.
JP Morgan has a Trump tweet volatility index now that they've made, and that's, I mean, it's an interesting report. We'll probably put it out some point of time later on the show. But they've come out with this report which speaks about this index, which is measuring
sure if it's a volatility index, then it has to be really high.
Really high, based on Trump's tweets and the impact that it has, something like that.
But, keeping that aside, for our markets, obviously, it's going to be an interesting, truncated week, but interesting data points coming out. You're going to be watching out closely for the inflation numbers this week, the IIP numbers. So, again, the economic data points take center stage and how they, in a way, impact the market mood as well. But before we run you through all of that and get you perspectives from our various experts, let's also look at the derivative space and how we're set up for trade this morning. Navneet is joining in for that. Navneet, good morning.
Good morning to both of you. Well, a sigh of relief for our markets as the volatility index cooled off, but we did move away from the lower levels that we saw for the last week. That was 10,750. For the week, we were down, but there was rally seen in the last three sessions. So for the Nifty futures, the rally was on account of short covering, as you did see the open interest going down by 2%. The premium also fell to levels of about 27. The Bank Nifty, which did underperform on one of the days when Nifty was moving higher on Friday, that also gained some traction. So Bank Nifty closing around the levels of 27,250. Once again, the open interest was down, indicating shorts were being covered. And India Volatility Index, which touched levels of 18 during the week, cooled off to levels of about 16.2. And if you look at the options data for this Thursday expiry scheduled on September 12th, the maximum open interest on the call side is at the 11,000, and on the put side, it is at the 10,900 strike. So once again, we're staring at a very narrow range of about 10,800 to about 11,000. But remember, on the upside, 11,150 will remain key, because that was the level from where index turned multiple times even during the August series. So what happened on Friday was more of put writing, because the 10,900 put strikes saw a lot of addition. Even the 11,000 put, the call writers went for cover as the index rallied. So you had the strikes like 10,900 as well as the 10,800 call strikes, which did see some bit of unwinding. On the stock futures front, a lot of stocks which were in focus. So REC, which rallied, saw fresh long positions. Shots were seen for DLF. A couple of Tata Group companies were going up from the likes of Tata Power and Tata Motors. Short covering was seen for both these two counters. Very quickly, markets are going up, but the FIs are selling on the cash side. But on the futures side, index futures specifically, some bit of long contracts were added to the tune of 6681. And on the option side, there were more of short positions seen, though there were a lot of contracts added on the call long side. But as you can see, put long as well as call short were nearly 35,000 contracts added on that front. With that, it's back to you guys.
All right, Navneet, thanks very much for that. So keep that in mind as we set up a trade this morning. But also joining us right now is Avinash Gorakshekar. He's the head of research at Joindre Capital Services on the show with us. Avinash, a very good morning to you. Let's start off first with the big one that's going to most likely see a reaction just by the fact that it's already seen such a run up in the last 1 week, and that's Equitas. With what's been happening, and RBI has said that they have to go ahead and list, and they are in violation of the listing norms now.
My guess is, I think, since RBI now has not given any relaxation for the SFB, deadline, I think it's obvious that, they would be obviously making a public issue. Some more details on this would be known on the conference call at 8:30 p.m. today, AM today. But I think overall, the mood is Equitas has already corrected quite significantly. So, the holding company discount, which normally one gives to companies which have got these kind of businesses, may not see a further sell-off. I think clearly I think you could possibly see a near-term kind of uncertainty in these counters, especially Ujjivan and Equitas. But overall, I think unless there is some clarity as to when this IPO is going to go through and what RBI now says, clearly is going to have a slight near-term overhang on the stock. But definitely, I think this news was quite surprising, considering the fact that many people in the markets were expecting some relaxation in the guidelines for the divestment for these small finance banks.
I think the conference call is underway currently, and if we can, we should probably cut in to see what the management.
The details would anyways be out as well. And you remember the management joins in at 9:50 a.m. on our website, on this feed as well, to hear more about it. But do watch out for that conversation. Avinash, the other one that is in focus right now, and the con call is underway, is Muthoot Finance. Now, just one small thing, and there are lots of other stocks in news as well, but just one small thing on Muthoot. Somebody was referring that how the impact of Kerala, or the Kerala contribution to bottom line, is about 4%. Even if 50% get lost, it's just about a 2% impact on the bottom line. And therefore, let's not make a big deal out of this whole Kerala situation for Muthoot. Are you in agreement, or would you believe there could be an overhang?
No, I think, Neeraj, clearly Kerala still is not a very big piece in the overall business pie. The management has clarified that this accounts for not more than 4%. And I think, markets are overly concerned and slightly jittery on the fact that closure of about 15 odd branches in Kerala could have a significant impact on the, on the profitability of the company. So I would believe that once the conference call is over, one could get a clear sense of how big the damage is. But I think clearly what the market fears is that if they completely exit out of Kerala, it should not impact their business in South India, which accounts for almost 50 to 60% of their overall business pie. But this seems to be a very distant possibility. So I think in the near term, I would not be surprised that business is going to be as usual. Typically, higher gold prices means that their business is fairly safe enough. But yes, if there is a significant fall in gold prices for whatever reasons, that could definitely trigger off a lot of M2M kind of situations for a company like Muthoot.
Okay. Got that, Avinash. So that is Muthoot Finance. In fact, should pull up the last 7 days performance of Muthoot Finance to see what the stock has been doing. Remember, both Muthoot and Manappuram, because of the way gold has been moving, has been in focus. But nonetheless, the fact that these Kerala floods have impacted business in whatever marginal way has also seen a reaction on the stock price. The stock's been down about 6% in the last 7 days for Muthoot Finance. But lots more to talk about. We've got a lot of other stocks in news, some brokerage calls. There is going to be a Dabur analyst meet. What is the anticipation from there? All of that and more from our team. Nikki, let's start off with you first.
Well, 5 stocks in news that I'd be covering. First one is Canara Bank, which has sought in expression of interest from bidders to sell its entire stake of 30% in Canfin Homes. Next in focus is Coffee Day Enterprises, which has appointed IDFC Security as an advisor for both identifying strategic option for stake sale and refinancing of the existing debt. DHFL, which is defaulted in payment of NCDs, was around 20 crore, and ET article today suggests that the company may get an emergency funding worth 70 billion. Shilpa Medicare, which has received 2 observations for the formulation plan in Telangana by US FDA, and the company says, however, there have been no repeat observations or data integrity related observation. And last on the list, we have Reliance Industry. That's the Bloomberg news that we have. Both Reliance and BP claim to commence gas production from the KG D6 basin in April-June 2020. Consortium is seeking bids for selling around 5 MMSTM of gas on long-term basis.
All right, Nikki, thanks very much for that. What are the brokerage calls this morning?
Well, a couple of them. The first one is on PI Industries, where Equirus has initiated a note with a long rating and a target price of 1,890 rupees. Now, according to the brokerage, the company has multiple products in pipeline to drive the export business. However, it warns investors that they should not expect similar growth every quarter, as exports growth can be lumpy. Now, the domestic business is expecting revenue growth to be driven by various products which are already in PI's portfolio. It also says that the revenue growth would drive the profit growth, a CAGR growth of around 27% over FY19 to FY22, which will more than double PI Industries' profit over this period. Now, this coupled with insignificant debt and a 20% plus return on equity will help sustain the premium valuations that PI Industries currently has in the market. The second one is on Torrent Pharma, where MK has downgraded its rating on the stock to sell from a hold and has cut the target price marginally to 1,582 from 1,620. Now, the brokerage has downgraded the counter due to the recent outperformance which leaves little room for error, says the brokerage. Now, according to the brokerage, the India business, which has slowed down in the last 2 quarters, will be the key to sustain the premium valuations of the company. Now, the US growth is likely to be muted. The brokerage is expecting a 2% decline in US sales over FY19 to FY21. Lastly, it says that given the fact that Unichem synergies are now largely in the base, company's margin would peak out in the medium term in going forward.
All right, and Dabur going to remain in focus, Agam.
Right. Well, they had their annual analyst meet, and well, there's some strategy, some more details on strategy that came out. The focus is on mainstreaming Ayurveda, and strategies are directed towards healthcare now. The company has been benefiting from the Naturals brand, but the challenges lie in contemporizing those brands as well. The near-term strategy, of course, is focus on power brands, and power brands do contribute to as much as 70% of Dabur's overall revenue, so that is where you will see a lot of focus in the near term from the management perspective. As far as demand outlook is concerned, while there has been subdued demand, the management suggests that for Dabur itself, that rural growth is faster than peers, and that it may very well likely be something that may aid in terms of growth going forward, but largely the focus on Ayurveda.
All right, thanks guys for that. So we'll be watching out for all of those stocks that we just discussed. But Avinash, I want to come to you on Friday's session, after the PBOC announced a 50 basis point cut in the cash reserve ratio. You saw a lot of excitement in all these metal names. Do you feel that you could see some more moves around the same?
I think most of the metal companies have actually been beaten down quite significantly, and I think within that, we feel that Tata Steel and Vedanta could possibly see a reasonable bounce. Hopefully, metal prices, stabilize. Our sense is that maybe the second quarter may continue to be a little weak, but hopefully, if prices stabilize, one could definitely see a little bit of upside in the near term, for companies like Tata Steel and Vedanta. So I think clearly, from a medium-term perspective, I think most of the negatives seems to have been priced into the price. So clearly Vedanta and Tata Steel look quite interesting.
But you're only looking at the larger ones. You're not looking at a SAIL, a Nalco, or some of the other smaller ones.
No, actually, Neeraj, clearly I think from a price and volume perspective, I think it makes sense to look at larger players initially. I would believe that, once we get a clear hint as to some sort of stability on the global metal price front, I think probably, you could see all the other metal stocks also moving up. But I think from a near-term point of view, it would be the larger frontline names which would actually move up further.
Okay, we'll watch out for the metal names as well in the session today. It was a very interesting move, and remember, we've also done a story around how, if we look at the past cycles, then these are the valuations from which metal counters have typically turned and given good returns. At least the steel companies have, if not the non-steel companies. So JSW, Tata, etc. could well be stocks that could be very, very interesting. Nifty Metal was up and about in Friday's session. Let's wait and watch if there is more in the session today. We'll be talking to our technical experts in just moments from now on the metal index as well. Just one quick follow-up, Avinash. Would you be betting on Eicher Motors at all, or would you leave it alone? It was the top gainer in Friday's trade.
No, in fact, Neeraj, at least in the near term, I would believe that, the second and third quarter is going to be extremely challenging. And I don't perceive the volume growth to actually show any kind of significant improvement. So I would believe that despite the fact that, the stock has outperformed significantly in the last few days, I think to expect earnings trajectory to come back in a very big way, at least in Q2 and Q3, would be a far cry. So I think it's better to wait for some more time and obviously then look at volume numbers with a more sustainable kind of, perspective.
What's the view on Tata Motors now? Because even that stock post the PBOC announcement shot up in trade. But, if the focus continues to remain on China, and if you do see some pickup on, the on-ground situation there, is Tata Motors going to be a key beneficiary?
I think clearly Tata Motors has been beaten down quite badly, but I think the near-term challenges continue to be, the kind of huge debt on the balance sheet. I think unlike Maruti or Hero MotoCorp, which are companies which are sitting on a lot of cash, Tata Motors has got a huge leverage, especially both on the domestic as well as on the foreign currency side. And I think what happens on the Brexit is also now going to be very crucial, and that could obviously also have an overhang on the stock. So I think it's better to wait for some more time. I would not be surprised that numbers would continue to be, negative at least for the next 1 or 2 quarters.
Okay, we'll wait and watch for these numbers as well. That is on Tata Motors. You know, the other set of stocks which did reasonably well in Friday's session, we'll talk about them a bit later on, for all of these companies which didn't get impacted by Geofiber. So you had the PVR and the Inox is moving up. The Dish TV and some of the other DTH players didn't have an as bad a session. That 5% up move on PVR was testimony of the fact that the market was so scared that Geofiber will disrupt the first day first show scene. It hasn't quite turned out that way, which is probably good news.
But even when they announced, there was a lot of skepticism around how will they actually go ahead with it, because it is detrimental to the big chunk of the business. And how would you get box office ratings? How would distributors like PVR and Inox allow such a thing? And much of the revenue is from this platform and not the digital platform. So how will that work?
Yeah, I mean, that's a big thing as well, because producers earn a lot from those footfalls that come into the theaters. But let's see, as the point that I think Sanjay Kapoor or Sandeep Das was making, at some point of time, if Jio has an X number of users and they tell the producer that you release this on my platform and we are giving this X set of monies, for smaller budget films maybe, it could well turn out to be a reality.
Then a question arises, how many movies can they do that for? I mean, and how big a purse do they have?
Some of them.
To pay them off to the extent that they would have earned if they would have released it in their
a theater. Yeah, so it's a big if, but yeah, there was a bit of a relief rally for some of these stocks in Friday's trade. But speaking of relief rallies, there was a relief rally in metals. There was a bit of a up move in the markets at large. Let's get in our technical experts on board to try and talk more about that. Ashish Chaturmota, head of technicals and derivatives at Sanctum Wealth, joins us right now on the show. Ashish, good having you. Thanks so much for joining in. What's your sense, Ashish? Friday was a good day for the market. Let's start off with the Nifty and the Bank Nifty right now. What's the trade that you envisage this morning?
Good morning, Neeraj. So yes, I think, if you look at as far as index is concerned, first of all, we need to understand the technical setup. The charts on the daily formation is creating an inverted head and shoulder formation in Nifty, which typically implies that at 10,650 we have created a head of the pattern, and now we are in the formation of a right shoulder. The breakout of that pattern comes only above 11,100 area, but the good part is we are holding on to 10,800 area. Now, if you connect this with the derivatives data also, there is a huge put writing which we are witnessing at around 10,800 area. So all put together, I think 10,800 at least in a shorter term time frame looks like is going to be a very strong support for the market. And since we have crossed 10,930, 950 resistance zone, I think in a immediate short term, the first up move would extend towards 11,050 to 11,100 area. But once we decisively sustain above 11,100 area, that would be area where you will see a lot of momentum chasing into the market, and which can extend this rally towards even 11,350, 400 basket. So considering all this, the risk reward is favorable on the long side of the trade. Keep 10,800 as a positional stop loss for any long positions in the market. Once you see a sustainable move beyond 10,950, again the momentum of 150 to 200 points from current levels is what one can expect at an index level.
So buy today, buy the Nifty today. Okay, just one quick follow-up, and there's a chart that we used in the morning on the trade setup on the metal index, and if you can pull that up, because it did very well in Friday's session, and as you can see, it's broken out of a 2-week consolidation phase of sorts, the Nifty metal index or the BSE metal index. Ashish, is there merit in trying to own any of the metal names or trade any of the metal names this morning?
So, see, if you look at from a very short term, yes, because if you look at on the daily charts, almost last 3 weeks, we have created a strong support close to around 2,200 area. From there, we are seeing some kind of recovery. There is a short term breakout above the 20-day moving average in the metal index, which indicates that at least in an immediate short term, a move towards 2,450, 2,500 is what one can expect at an index level. Now, the stocks to play, I think Tata Steel would be a preferred bet in this entire journey to play the short term pullback, but one need to understand this is more from a very short-term recovery rally. I don't expect it to see a very strong, complete reversal in the downtrend which we are witnessing. But at least in a shorter term, a good 5 to 7% kind of upside from current levels is what one can expect. And the stocks to play would be Tata Steel with a stop below 345. On upside, I think the stock has a potential to see 370 to 375 kind of area in next 1 to 2 weeks time frame.
Okay. Got that. Let's also bring in Ruchit Jain, Ruchit Jain, technical analyst at Angel Broking. He's joining us on the show right now. Ruchit, a very good morning to you. What is the setup suggesting to you, and how should one trade it?
Yeah, hi, very good morning to you. Good morning to everyone. Well, if you see after that low top low bottom structure which was formed in the month of June and July and even most of the August, now what has happened on the index front, the trend for the index has changed from down to sideways. We can clearly see a consolidation phase since last 1.5 weeks where the lower end towards 10,700, 10,800 range have been bought into, and the higher end around 11,100, 11,150 have been sold into. So I think at least for a short term the trend would be sideways, and since on Thursday and Friday last two trading sessions we have again seen some buying emerging from 10,700 mark. We could see again the index high heading towards the higher end of the range, which is around 11,150. So at current levels we are advising our clients, even our clients, to trade with a positive bias. You can see good stock specific momentum, specifically on Friday the overall market breadth was too positive. So I think on the index front, any kind of dip again towards 10,900 on intraday if we get, then one should use that as a buying opportunity, keeping a stop loss somewhere below 10,800 or 10,780, and again expect level towards 11,100 to 11,150.
Okay. What would the stocks be then?
Have a couple of buy recommendations. One you all have already discussed about the metal space, that the index has given a breakout of 2 weeks consolidation. So some pullback move is definitely on the cards in the metal space. So Tata Steel, amongst all the stocks, seems to be the top pick. Even if the stock has already seen a very sharp correction, and even if you see the derivative segment in this recent correction, there was decent short positions being formed. So if we see some sort of short covering move, which was already witnessed in Friday's trading session as well, and a 38.2% retracement of the previous correction gives us a target projection around 388. So at current levels one can initiate fresh longs in Tata Steel, keeping stop below 337 for target around 388. And another short covering candidate, the prime reason why I am looking for short covering candidates, because the trend has changed from down to sideways on the broader markets. So many stocks which have short positions built and those are trading at the support, such stocks would come up for short covering. So Bharat Forge is another candidate which we believe could see some short covering move, since there is significant short portions built up, which we have seen in last couple of series, and the stock is trading around its support on the weekly charts. So one can go long on Bharat Forge in anticipation of a short covering move, keeping stop loss below 388 and expect target around 407.
Okay, got that. Ashish, you've got 3 stocks that we're focusing on. Diagnostics, that's an interesting space, and then you've got a Petronet and ICICI Pru.
Yep. So as far as insurance basket, I think the entire basket has been looking quite promising, and we have been recommending these stocks for a while. I think if you look at current levels, ICICI Pru has given a strong breakout on the daily charts. If you look at the stock is trading at a 52-week high, and in last 1 week we have seen a strong volume momentum coming into the stock. So I think at current levels it's a buy. 430 would be my trading stop loss. On upside 460 is a short-term target one can expect in ICICI Pru. Second is Petronet. Again, the stock has hit a 52-week high after consolidating for last 1 year. So I think here one can expect a very strong rally towards 274, 275 in a shorter term time frame. 260 would be my trading stop loss. But if you look at from a longer term chart perspective, also Petronet is one stock which is going to show a stronger up move in next few months. And Lalpath Lab is in the cash segment. Again, the stock is showing a very strong traction. We have seen strong delivery volumes in last 1 week. Stock has hit a 52-week high after consolidating for last 1.5 years. So I think here one can expect a decent upside towards 1340 levels. For that, 1230 should be the trading stop loss for going long into Dr. Lalpath Lab.
Okay, Dr. Lalpath Labs there, and both Metropolis and Dr. Lalpath Labs have been doing relatively well. But gentlemen, stay on with us. Lots more to discuss with you, but on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we are looking at Bajaj Finserv on the charts, and we're looking specifically at the weekly time frame. An interesting chart pattern that is seen forming over here. Now, this is the weekly chart for Bajaj Finserv over the last 3-year period, and these are the two basically trend lines which indicate a rising channel formation for the stock. Now, it had gone up to levels of close to 8,800 a few months back, and then it came crashing all the way down to close to around 6,500 mark. But that is where it has taken support at the lower band of the rising channel formation. As you could see in the yellow line as well, every time it has come down to these levels, it has acted as a strong support, and it has not managed to break that long-term trend which has been following for the chart. Additionally, what is important to look over here is the purple line, which is the 55-week exponential moving average. Now here too, every time that the stock has come down or is trading closer to the lower band of the rising channel formation, it has again taken support at the 55-week exponential moving average. There was a bit of a whipsaw, or a one-off when it came to the period of September last year. We had the IL&FS crisis breakout. The stock had a big correction, but take a look at how it has moved. The first instance was in December of 2016. It came down to that level and it surged almost 40-45%. Again, when it comes to the month of almost January, end of February, first week, it took support at the 55-week exponential moving average and went back all the way up to 8,800. So both of these factors are also positive, but what's also working in favor of Bajaj Finserv is the RSI. So take a look at the RSI in the lower panel, and 40 has been more or less an area of supply zone for the stock. So thrice it has come down to these levels. And these are exactly the points where it had taken support at the lower band of the rising channel as well as the 55-week exponential moving average, and it has managed to move up. This was again in the month of September, in December of 2016, and then again it has twice come down to these levels. We saw a big move a couple of weeks back, then it got negated, but again it did not manage to close below that. If you take a look at the price chart once again, this is what I was trying to highlight. There was this big green candle, then there were three subsequent weak candles which indicated to bearishness, and then again it has not managed to close below that mark. So all these factors put together, Neeraj, it looks like Bajaj Finserv is poised to move higher from the current levels.
And efficacy?
So Neeraj, if you take a look at how it has done over the past, the two times in fact when it has taken support over there, on an average it's moved over 20-25%. But keeping in mind the market situation, even if you don't see that kind of a move, at least on the upside, the lowest target that could be seen is close to around 7,600, which is the high of that previous green candle.
This is as per the Bloomberg indicator. Remember, Yash is not recommending or making a recommendation out here. Yash, thanks so much for putting that into perspective. Do watch out for this stock as well, Bajaj Finserv. Insurance companies by and large have not done too badly. The question is, can Bajaj Finserv, which is a combination of insurance come holding in Bajaj Finance, gain more, or could some of the others like HDFC Life, SBI Life, or ICICI Prudential, which has been on a bit of a roll, also do that? But we've discussed these stocks enough, really. Watch out for some of these insurance names as well. Couple of stocks which went up in Friday's session, Avinash, small names, Prabhat Dairy on that plans for delisting. And what do you make of that? And two, if you don't have a view there, then Shankara Building Products, the last couple of days has been on a bit of a roll.
I think as far as Prabhat Dairy is concerned, I think markets are expecting that the buyback price could be at a significant premium. I think clearly, Neeraj, here the management has done the deal at the cost of actually obviously affecting its minority shareholders. Our sense is that after the share price has fallen by almost 80% post the announcement of the deal, what kind of buyback price comes in is going to be very crucial. In case the buyback price is not attractive, one could definitely see a major retracement because the public shareholding is pretty large. It's about 50-odd%, and for the deal to go through, they need to have a reasonably good attractive offer price to actually get that 50%. As far as Shankara Building Products is concerned, I think clearly I would not be surprised that this is a short-term bounce. In the near term, what kind of earnings impact and what kind of operational yields come in is going to be very crucial, because the management has actually gone on the back foot here, mentioning that top line growth as well as margin pressure could continue for a couple of quarters. So I think it's better to wait for quarter 2 and quarter 3 numbers. Overall, I think Shankara Building Products still would definitely be looked upon seriously only for those high risk guys which have actually are willing to bet in the near term, because this company has actually promised a lot and delivered pretty less on ground.
Okay, we're just 2 minutes away from market pre-open, but Ruchit, Maruti Suzuki at about 6,200 odd had gone back to about those 5,900 levels just a few days ago. As you can see, in the last 1 month, 2 times where it's come down to about 5,800 from where it's bounced back again. What would you do now?
So this is a pullback move which we have been witnessing since, which we have even seen in the month of August. The stock rallied from 5400 to 6300, 6350. Usually any kind of pullback moves has three legs, and after retracing about 50% around 5800, I think the stock would see next leg of up move, which would lead the stock towards its 200-day moving average. The 200-day moving average is now placed around 6600, 6650 mark. So we could see the stock heading higher towards 6600 to 6650, which is about 8 to 10% higher from current levels.
Okay. Well, we will also talk about what could happen to RBL Bank and Coffee Day. A couple of news flows. I mean, officially, IDFC Securities has been appointed as an advisor for doing deals. Mint has, of course, reported that Coffee Day has sold out the tech park to Blackstone. So lots of news flow surrounding these two names, but RBL Bank in particular, some brokerage notes as well. We'll talk about that. So that is one. And arguably, a couple of other names, we've already discussed PVR, but Sterlite Tech could well be in focus. A big move in trade in Friday's session. Let's see if there is more in store. We'll ask Ashish Chaturmutha about that a bit later on. But 40 seconds left to the pre-open session. And Devina, if the Asian screen is to be believed, we'll have a start which is marginally in the green. The only question is, devoid of any major cues, save for what will happen to the globe, we might have a start for the first 1 hour at least, which is not very dramatically different from Friday's close.
Yeah, although the SGX is absolutely flat now, so we'll have to wait and watch as to how that plays out. But expect a flat to slightly positive open for the Indian equity markets. The question is always the close and not the open. But there you've got it, about 10 seconds left to go for the pre-market session to begin. Japan is doing well. China, Hong Kong, every other Asian screen is in the green. Pre-open on your screens. Nifty 50 opens positive at 34% higher. Sensex is showing you an unnatural 1.5% move on the upside. That will come off. But individual stocks and the moves thereabouts. So big moves are seen in Bharti Infratel and Wipro, obviously, again, not what you will stick with by the end of pre-open, but the initial ticks are strong. Britannia is up about 1%, Indiabulls Housing Finance is up about 1%, Adani Ports is up about 1%, Grasim, Yes Bank, HCL Tech, NTPC Reliance is doing well. A lot many more stocks in the green. Amongst the losers, we have Maruti Suzuki, that's at 6,000, Tata Motors is down 1.8%, IndianOpen Bank, UPL are some of the other bigger losers. For the currency, some strength, but very marginal. You probably won't even take notice of it. Right now it's 71.71. And broader market space, I think the pre-open is at least slightly more positive.
Yes, it is. Well, a couple of names. Equitas should come up on your screen, and let's see if that is reacting big time to the development. Well, I don't know if it'll be a 10% downtick or no, but because the stock had run up a bit, it might see a reaction. Let's wait and watch how it reacts. The other one to focus on could well be Aditya Birla Capital. We haven't quite discussed that stock, but remember what this SL Group repayment to Aditya Birla mutual fund does is bring AB Capital firmly in focus. It's not a very volatile stock, it's not a very liquid stock, so may not see an immediate reaction, but do watch out for this one in the session today as well. RBL Bank, Coffee Day, both of the stocks in focus. IDFC as Securities has been appointed as one of the advisors or the lead advisor to doing some transactions. Coffee Day up 5%. Let's see if RBL has any reactions. And some stocks which are moving up. Well, I don't know if anything's happened to the Baltic Dry, but Shipping Corporation of India is up and about in the session today. Maybe that will change. We'll watch out for PVR, we'll watch out for Inox, we'll watch out for Dish TV, all of those stocks firmly in focus. The bond yields, just very quickly, if we can see what's happening to the yields as well in the session today. The currency is very, very flat. Remember, it's a truncated week as well for our markets. On the back of one truncated week already, 6.6180. Well, the market certainly seems to be giving more merit to the possibility of there not being any kind of sovereign bond issue now. And the last few days, there's only been hardening. Maybe more stimulus measures come at some cost. Maybe this is the cost, 6.60 or 6.6070. Despite expectations of more rate cuts, the yields have only hardened from the time that the first set of measures were announced by the government. However, let's focus on the stocks at hand. RBL Bank has taken a beating post its first quarter earnings, where it guided for some pain in its asset quality. Going forward, post this correction, brokerages have trimmed their price targets on the stock, but have maintained their bullish stance on the long-term potential. Shefali is here with the summation of some of those notes. Morning again, Shefali.
Hi, morning. So first, Kotak has put out a note and they've actually upgraded the stock from a reduced rating earlier to an add rating now, and the target price is around 350 versus 500 rupees per share, and they're saying that the revised fair value captures risk from higher provisions. So that is a main risk that can erupt for RBL Bank going forward, considering the asset quality issues. And the reason for the lower target price is mainly lower return on equity, slower growth, and potentially lower capital infusion. So that is one major concern that Kotak is talking about. They expect ROE to contract to about 8% and cut EPS. They've cut the EPS by about 40% for FY20. They also say that loan growth is expected to slow down and the share of unsecured loans may rise faster for them, for it has already been rising at a faster pace in comparison to some of the other peers and may continue to do so in future as well. ICICI Securities has also put out a note. They are also maintaining the buy rating and have cut the target price, however, to 536 versus 725 per share earlier. And they're saying that the stock price has fallen in last couple of months, mainly because of the asset quality and growth issues. They've cut the credit growth target for FY20 to 21 given the systemic slowdown, but they are saying that the long-term story for the bank remains intact. And some of the factors they do like are the top quality management team, no significant legacy issues when it comes to the asset quality. Only in past couple of months, management itself highlighted that some of the corporates may actually create some amount of stress going forward. They also say that relatively high risk adjusted retail yields and relatively low market share of 0.6% offers long-term growth potential. One of the interesting things actually which Kotak said in its note is perhaps it's the best for the banks to not give guidance, because that is not working well for them considering the volatility in the environment that we are in. And remember, the stock price tanked when the management itself gave a guidance as part of the Q1 earnings as a proactive measure. But according to Kotak, it's probably prudent to stay quiet.
All right, Shefali, thanks very much for that. RBL Bank, Avinash. I mean, with the peaks and troughs that the stock has seen, it's been a fairly turbulent time for the counter.
No, I think my sense is that over the next 1 or 2 quarters, you could see a lot of asset quality stress. And I think the management has already clearly hinted post the Q1 numbers that in the near term, I think from the unsecured book, there could be a lot of asset quality stress. So I would believe that, at the current odd levels, the stock could at best be a market performer. Markets could obviously be seeing what kind of asset quality stress happens over the next 3 to 6 months. And I think growth numbers, which earlier used to be 35-40%, are now going to be in the region of 18 to 20%. The management has clearly hinted that the capital protection is now more important than growth proposition, and that is definitely something the markets would not like. So I would believe that in the near term, the stock could at best be a market performer, and it's better to, I think, put money on larger corporate banks which are more stable and safer, especially on the asset quality side. Something like an Axis Bank or a ICICI Bank would definitely be much better compared to an RBL.
Okay. Ashish, the fact that the stock has been oversold?
Yeah. So it's oversold, but if you look at the long-term structure, it's still not so promising. Stock has corrected more than 50% in just 3-4 months, and that's definitely a very significant amount of correction. Yes, there can be pullbacks, but whether this pullback should be looked as a serious buying entry, I would advise no. In fact, I think any pullback towards 365, 370 area would be a good opportunity to reduce your long exposure in the stock.
A lot of queries would come about what to do with Equitas or Ujjivan. The first 7 minutes, Devina, as their pre-open rates are settling down, Equitas is showing signs of signing 10% lower. Now, I know brokerages have said that they are maybe a bit more sanguine because this does not have a big impact, but there is a 10% downtake, as they say, bhav bhagwan che, and this clearly shows that the market is disappointed with what's happened to Equitas holdings. Now, Avinash, would you use this correction as an opportunity to buy, or would you leave it alone because you do not know how much further will it go? As a side, give a view on Ujjivan as well. What would you do there?
No, I think Neeraj, as of now, I think in the near term, at least for the next 2 to 3 months, I think until some clarity doesn't happen on how the IPO process is going to be initiated, it's better to stay away from both Ujjivan and Equitas. Our sense is that the markets would definitely look at this development in the near term as a major deterrent. Whatever holding company discount Equitas gets would depend on what kind of pricing the IPO gets for the small finance bank. And the same issue is relevant for Ujjivan. I would believe that the markets are definitely disappointed and were expecting that possibly this deadline from RBI could be extended. So in the near term, this factor could play a kind of overhang on the stock. Although clearly our sense is that typically even whatever IPO comes in, that could definitely not be at a significant premium considering the profitability of the small finance bank and the current market conditions.
Okay. So that's the fundamental view. Ashish, maybe in Ujjivan, Equitas anyways locked 10%. What are the levels that you see there? But Ujjivan, is there a trade possible?
See, I think if you look at in the last 3 weeks, there was a lot of long build-up which we have witnessed in the stock. In fact,
in Ujjivan or Equitas?
In Ujjivan particularly,
okay.
we saw a good rally from almost 285 to 310. And if suppose today it breaks 295, 294 area, that would indicate that a lot of longs will start liquidating their positions, and that can lead to some more selling pressure towards 290 to 288 kind of area. So I think if it breaks below or opens below 295, 296, that's going to call for a lot of long liquidation in the stock.
Okay, we will watch out for both of those names as well. About 5.5 minutes left. A stock that was doing really well. I mean, this is as the end of the pre-open session. These are the stocks that are likely to make the biggest moves. Two stocks that were doing very well. A stock apiece to both our technical experts. At least, Ashish, let me start with you very quickly on Sterlite Technologies. Big move in Friday's session as well. 123, 124. Is it breaking out of some consolidation, and would you trade it?
Yeah, so last 3 weeks it has been consolidating at the lower end of the range, but this consolidation I would read it positively because for the last 3 weeks stock has been maintaining to hold above this 110 mark. I'm expecting the stock to test at least 155, 160 in next couple of few trading sessions, and for that I think 112 would be my trading stop loss for going long into Sterlite Technologies.
All right. Stay on with us, gentlemen. Lots more to talk to you about, but we're just minutes away from market opening. Let me tell you all that you need to know to stay ahead and trade today. The Reserve Bank of India has denied extension of deadline to Equitas Small Finance Bank to list onto the stock exchange. The regulator has also imposed various restrictions on the company.
SL Group pays a sum of 4,450 crore rupees to lenders, including mutual funds and NBFCs. That means it still needs to pay 7,000 crores by the end of the month.
Canara Bank seeks expression of interest from bidders to sell its entire stake of 30% in Canfin Homes worth 1,540 crore rupees.
Dabur has cautioned that Q2 earnings are likely to be weak in terms of strategy. It has reiterated focus on power brands, striving to mainstream Ayurvedic products.
Lastly, Shilpa Medicare receives 2 observations for formulation plant in Telangana from US FDA. Company says no repeat observations or data integrity related observations.
Well, that's largely all that you need to know to stay ahead in trade today. One of them was Canara Bank. Avinash, any thoughts? Canara Bank going to sell stake in Canfin Homes worth 1,450 crore rupees. PSU banks in favor, out of favor. Canara Bank in particular.
No, I think definitely I think this is a positive move, and I think for a long time the markets were expecting that Canfin Homes could be hived off, and Canara Bank could get definitely a good amount of value for this holding. Our sense is that looking at the kind of stress currently in the housing finance market, one may not expect a very significant premium for this business, but looking at the kind of asset quality and the loan book kind of composition what Canfin Homes has, I would not be surprised that in the very near term, hopefully if this deal materializes, then you could see a near term bounce in Canara Bank. I think clearly from a near term perspective it would obviously add to Canara Bank's cash flow, but from a longer term perspective, what kind of buyer comes in Canfin Homes is crucial. If you have a very large P fund or maybe a very strong buyer in Canfin Homes, in the near term definitely this is one stock which has been battered quite badly, and there also one could see a reasonably good bounce.
Do you track Aditya Birla Capital?
Actually, Devina, in the near term, the news flow from SL Group is going to be positively impacted because within the mutual funds, apart from Birla, typically even HDFC MC gets a lot of money. I would believe that in the near term, the kind of price which we are seeing now could possibly be positively impacted. I think clearly after a long time, some relief could come in the form of this kind of cash flow.
Ruchit, Canfin Homes, if you track that one.
So if we look at the stock, within the housing finance space, the stock has shown a good outperformance in the last 3 or 4 months. Clearly, if we go by the basic Dow theory, then a high top, high bottom structure is been formed in this stock. And till this high top, high bottom structure is intact, the short to medium term trend would continue to remain positive. So at current levels, if one has to look from a trading perspective, one can initiate fresh longs with stock below 380 and expect target around 424 to 427.
Okay, got that. The other one, obviously, Avinash, I want to talk to you about is Nestle. Now that's going to make its entry into the index at the end of the month. Do you feel it's worth a look at? Because nonetheless, it's in a space that's growing. It's doing well on all growth parameters. Do you feel that it's a buy, or do you see it meeting the same fate as the Britannia?
No, I think as far as Nestle is concerned, I think their product basket has grown quite commendably. In fact, if you look at the Maggi product as well as the chocolate business, I think in both these businesses, not only volume growth but margins have been very strong. And I think despite the fact that the stock enjoys a very strong premium, I would believe that in the near term, its inclusion in the index would obviously make a little bit of more buying in the stock. And obviously, from a longer term perspective, over the next say 2 to 3 years, it would still make sense to actually buy the stock on every decline. So I think in the near term, it may appear expensive, but a longer term, I think looking at the cash flows, the business model, and the product categories, and the kind of money they are going to spend, obviously a lot of money is going to be spent on fresh expansion. That is all going to obviously get reflected over the next 2 to 3 years.
Okay, 1 minute left to go for market opening. Quick top calls from both our technical experts. Ashish, let's start off with you first.
So I think, apart from ICICI Pru, Lal Patle, even one stock which looks promising to me is the Dabur. I think on any dip, this is a good buy. 430 would be my trading stop loss. On upside, I'm expecting stock to hit 460, 464 kind of zone in next couple of few trading sessions. ICICI Lombard in the cash segment, this is one stock which has seen some correction. I think here one can initiate a long. 1180 would be my trading stop loss. 1250, 1260 is a short-term target one can expect in ICICI Lombard as well.
Okay, quickly, Ruchit, your top call?
I would recommend buying BEL as some of the PSU names have been doing well. One can still go long in BEL with stock below 106, expect target around 140.
That's the market starting off, so we'll come to you post for that. But BEL essentially was Ruchit's top call. The market starting off about 0.25% lower, about Nifty Bank about 100 odd points lower in trade. So the start is not quite what the Asian screen was suggesting, or what the SGX was suggesting as well. And the mid-cap and the small-cap indices are likely to start off flattish or marginally lower. Yeah, flattish actually the start. About 23 points off for the mid-cap index. The small-cap index is absolutely flat, no movement whatsoever. Bring up the heat map and let's see what's moving and what's not. Maybe the metal names could be doing well, but an overwhelming tick of red with autos leading the charge down. I mean, look at that auto pack. The expectations were maybe that Friday the press conference will deliver something for autos. That didn't come about. Look at that carnage here, not carnage really, but look at the cuts here. Tata Motors, Maruti, Eicher, Mahindra & Mahindra, Bajaj Auto, and Hero MotoCorp. All the auto names which had gone up in expectation that there will be something have all come off, and not surprising. I think stocks like Ashok Leyland and the others too would have corrected. HDFC Bank down about 1%, Z down about 1%. Okay, and that's essentially the list of the losers. It's banks, autos, essentially rate sensitives which have all come off. Autos with the reason that I told you about. What's done well? Indiabulls Housing Finance marginally higher. Aside of that, no big gainers really. So 0.5% down, led by rate sensitives. This is not a surprising start at all. More red than green. The Nifty Bank very quickly now down 200 points. We'll get in our experts to comment on the Nifty Bank as a trade, but very quickly, couple of pockets that I want to highlight. Equitas Holdings should be in focus. It's that key stock to monitor in the session today and should start off lower. The pre-open rate anyway suggested that 7.5% down for Equitas Holdings. The other two stocks in focus are Coffee Day and RBL Bank, and let's see if there's some reaction thereof. Nothing on RBL Bank really. Coffee Day though, up about 5%. Devina, what are you spotting?
Other than that, let's also take a look at what Canara Bank, Canfin Homes are doing. Canfin Home is doing, Canara Bank is looking to sell its entire 30% in Canfin Homes. Canara Bank not a whole lot much. Canfin Homes is up about 1.4%. Aditya Birla Capital, to see what that one is doing in light of the SL Group prepayment. The stock's marginally higher in the green. You've got the Dabur analyst meet happening today, so ahead. Got takeaways from that. The stock's not doing a whole lot much, 438. Then you've got DHFL. There's another default, about 20 odd crores. Divan Housing Finance. Stock's down about 1.6 odd percent. Other than that, we've got Eros International, which is up 4-5%. CG Power has been gaining on a consistent basis last 7 days, actually. It's been on a daily gaining trot, so it's up 40% in the last 7 days. GMDC, that's up 2.2%. Bajaj Hindustan, Shilpa Medicare, we just spoke about that one. Then you've got the likes of Ashray Infra and the diagnostic space, so Dr. Lal Path Labs and Metropolis. Should pull up both of these stocks. Dr. Lal Path Labs is up. Metropolis, on the other hand, is down 1.8%. Remember, Metropolis is any which ways run up much more, so some amount of profit taking anticipated there. Then you've got the likes, Sugar as a pocket is doing okay, Oberoi Realty from the real estate pack also holding steady ground. Losing out, so Mani Ceramics is down 8% in today's session. You've got the likes of Ujjivan Finance along with an Equitas, which is down 3%. And Tata Motors, DVR, National Fertilizer, some of the other losers in trade. More negative than positive this morning. So the breadth of the market, 583 stocks decline, 493 stocks advance.
Well, it shouldn't surprise, but quick opening thoughts before we thank all of you. Actually, just one question, Ashish, to you, and that's on the auto stocks, the way they have started off. Is there a short here? Tamo, Maruti, Eicher, all of them start off weak.
So I think, Eicher is one stock which I think is in a weak trend, and I think here one can look for some kind of shorting opportunity. On upside, 16,300 would be my trading stop loss. On downside, 15,500 is a short-term target one can expect in Eicher Motors.
Okay. Gentlemen, Ruchit, very quickly, Bank Nifty, 200 odd points. As I said, we should take a call there. Very quick thoughts here.
So last few days we have seen quite a narrow range in Bank Nifty from 27,200 to 26,800. So in case if we see the index again retesting the lower end, that is 26,800, we could see some buying interest coming over there. So wait for some more dips of about 200 points. In case if it comes around 26,800, the risk reward ratio would be favorable to again go long there.
Okay, we'll leave it at that, gentlemen. Thank you so very much for joining us. Ashish, Ruchit, Avinash, really appreciate your time this morning. All right, and then let's bring in one more important voice. Ashwini Agarwal, founder and partner at Ashmore Investment Management India, is joining us right now on the show. Thanks very much for taking out the time, Ashwini. The overall mood of the market seems to be slightly more volatile. Do you feel it's actually an apt time to start cherry picking right now, as per what most of the market commentary has been suggesting, that you look at SIPs right now into the more beaten down names?
Yes, absolutely. I think barring the handful of some large cap names which have held up through this carnage, most of the market, small and mid cap stocks especially, are down significantly from their peaks in January 2018. In several cases, the valuations are very attractive on a long-term historical basis. So where one has confidence in the business, the balance sheet and cash flows, I think it's a great time to be buying from a 2-year perspective. So obviously, we are going through very turbulent times. What's going on in the rest of the world, what's going on in India on the consumer demand side. But I think fundamentally, there are no macroeconomic imbalances. So I think things will sort themselves out. So if you have a 2 to 3 year perspective, this is a great time to be investing.
Okay. What are the pockets of interest, Ashwini? I mean, while we take a look at the fact that the overall mood is of investing in bits and pieces, but that too needs to be focused towards areas of growth and the potential upside there. So what would you be advising to that regard?
So if you look at where we have been focused on, one is the private sector banks in the is one area of interest to us. The other area of interest to us has been pharmaceuticals. Private sector banks were beaten down a lot over the last 3 or 4 years. They've done relatively well over the last 1 year. But what's going on in the entire banking system, my sense is that the private sector banks will continue to enjoy a very healthy operating environment. The competition is quite limited. The NBFCs are obviously facing a lot of stress, so the competitive environment from the NBFCs and the PSUs for the private sector banks is quite benign. So I think despite the outperformance that we may have seen in some of the large private sector banks, I think that's still an area of interest to us. Similarly, pharmaceuticals significantly beaten down over the last 3 years. Valuations are very attractive. There is still some cloudiness in the larger names in terms of the kind of earnings growth that might come through in the near term. But across the board, the businesses are supported by very healthy balance sheets. Promoters have a great track record of identifying and delivering on opportunities. So it's a question of which names you want to pick. But that's another area of interest, and a weaker currency helps that as well. And then there are a whole bunch of industry agnostic, bottom-up buy ideas that we come across, especially in the small and mid-cap space, where stocks are beaten down, where cash flows are good, balance sheets are fine, what the business seems to be doing makes sense in the long run. There might be some short-term headwinds, but one has to look past that and take a call on the longer-term future of the company.
Ashwini, just one more angle to that. Obviously, while we'll start looking at investments from a retail standpoint, even from the domestic institutional investor standpoint, funds have been supportive. They've not been able to match the outflow of the FIIs, but there's still inflows coming in from the domestic institutional investor. But the big leg up in the market will happen only once the big money comes back in, which is not seeming to be the case anytime soon. And considering how interest rates are moving the rest of the globe, does it look like much of the money is starting to shift towards debt rather than equity? And India now starts to look more expensive considering the growth numbers that we are posting.
So you're right in a sense that relatively speaking, if the earnings growth is still going to be elusive yet another year in fiscal 20, then valuations don't look that attractive, especially if you look at it on an on an index basis. But what my submission here is that people have to look past the index. Now, what foreign investors, I suppose, and I can only speak in abstract terms because we definitely don't share that view, may be facing is either redemptions or relative opportunities elsewhere in the world. I don't know. My sense is that one has to look past the index valuations because the index valuations appear expensive. They're highly dichotomous, You have a few stocks that are quite expensive relative to their own history, relative to their peer set elsewhere in the world, and you have a whole bunch of them which are quite cheap. So should you be guided by the index valuations at all is a question I would like to ask. I have no great insight into what's driving all this redemption from the foreign investors. There's obviously slowing growth. There's obviously the political noise surrounding Kashmir, surrounding whatever else. So there is a little bit of disappointment there. But these things can turn. I mean, sentiments don't take too much time to turn. So let's look at the macro environment. I mean, the macro environment is very supportive. We don't have any imbalances that are scary of any nature. I mean, our external account is in good shape. Our fiscal balance is in good shape. Inflation, interest rates, all are looking benign. We have a tight liquidity environment right now, but the government seems to be working very hard through the RBI to improve that. I'm given to understand that the spreads on corporate credit have started to narrow. So as this goes along, who knows? These flows may turn. So I can't sort of give you a very concrete reason why foreign flows should continue to remain negative for a much longer time. Of course, there are risks on the horizon which are global and which are local, and we will have to see how they unfold and what investors do in response to those events as they unfold.
Ashwini, morning. Neeraj here. The consensus view seems to be that while large caps may still correct because they haven't corrected as much should a correction happen, the correction in mid caps and small caps will not be severe. In some cases, there won't be a correction even if the Nifty were to correct another 5%, 6% from these levels. Are you with consensus or do you differ?
I would tend to agree with that observation. Even if you look at the components of the NSE small cap index or the BSE small cap index over the last month, they were quite evenly spread out in terms of gainers and losers. Earlier on, I was listening to your commentary before coming on live, and while the markets are down, the gainers and losers are spread quite evenly. So obviously in the small cap space, there is a situation where value is starting to emerge and those stocks are not correcting as much. And there might be opportunities there. So my sense is that as we go ahead, even if the large caps were to correct, and I'm saying that even if, because I don't know whether they will or they will not, given how much value destruction that has already taken place. My sense is that the large and the small and the mid cap space, which has already seen a lot of correction, may not correct much more deeply from here. So I tend to agree with what you're saying.
Okay, Ashwini, the other one small, actually two pockets which confuse me, and one that is confusing almost everybody is autos. They're down today, of course, because the expectations were that the FM will announce something, and the industry opinion is quite split out there. I read this piece from the Hyundai ex-CEO who said that it doesn't behoove the industry well to go with a begging bowl to the government every single time. But that is one pocket if we have views there. And two, capex, wherein capex related plays, wherein most people say that the government doesn't have the finances right now with the tax collections the way they are to have large capex, and any kind of capex gains that are coming in are not necessarily happening within the domestic place. It's actually going to MNCs which are not necessarily listed in India. Your thoughts on both of these pockets?
So autos are obviously in a difficult space. They have taken a huge hit on account of financing not being available to a whole bunch of borrowers who need to purchase these vehicles only on credit because they can't afford down payment. So that's been one part of the story, which I actually see normalizing as we go ahead. So that part of the story should normalize. The other is the distress in the rural areas where there has been no increase in real income of farmers for almost 3 years. So that demand is under pressure. So despite the good rains this year, my view is that unless the government makes a push for more direct transfers, and that brings back to the point of how do you afford all of this. I think rural demand outlook continues to be a question mark in my mind. So autos are in a difficult space. Whether the government should cut the GST or not is a moot question. I mean, I read that piece written by the gentleman you referred to, and it's a philosophical debate. As a business, if a business can ask for some help from the regulator or the government from time to time, there is nothing wrong. At the end of the day, the auto companies have invested a huge amount of money upgrading their equipment for BS6, and if there is a shortfall in demand that's taking place because of liquidity events, there is no issue in asking for a short-term relief, and it has much wider economic ramifications. Also, I personally don't understand what is the logic of having the highest GST rate applicable to autos and cements in particular. And on a broader front, I think this whole lobbying for lower rates and higher rates is all driven by the fact that we have 5 GST rates. I mean, the sooner we converge to 2 rates or 1 rate, the lesser will be the arguments around why you have a special rate or why there is a need for an accommodation for a particular industry. So that's my thought on the auto industry. What was the second question again? Sorry.
Capex related plays. The government will not have the arsenal to really push through large capex.
Yes.
What happens here?
Yes, the finances. Sorry. Absolutely. So here I think the creativity in unlocking the finances is the real question. So what this government has done over the last 5 years is essentially kept a tight leash on fiscal finance the fiscal either through off balance sheet items by not paying a lot of people that have provided the goods or the services to governments or to government agencies, or by transferring ownership in stakes held by the government to other PSUs. And I think the time has come to take a hard look and say that we own a whole bunch of these assets, and is there an external financing that that we can arrange? And by that I mean privatization. I think it's time that the government looked at privatizing in earnest. Good, profitable PSUs that don't have a significant strategic implication need to be privatized. I mean, let's take the OMCs for example. I mean, you have 3 large oil marketing companies. Why do you need all 3 of them? You can privatize one of them. If you wish, you can hold on to the other 2, and you will still have enough room to dictate petroleum product prices if that's what you wish to do. By the way, which is a stated intent of the government, is that they don't intend to do that. So my sense is that you have to privatize. You have to look for resources outside the framework that you have been using over the last 5 years, and that is what needs to finance the budget. So if the government keeps dipping into the same pool of savings directly or indirectly, which is the pool of savings being generated inside India, which is a combination of households, combination of corporate savings, and combination of public sector savings. If the government keeps dipping into the same pool of savings, then we are stuck in the same place. Your capex can't increase. So I think the answer to your question is that yes, capex looks disappointing now, but I think the government is well aware of that, and I think if they make some sensible choices in the next coming weeks or coming months, then I think the outlook can change, and that's what I'm hoping to see.
Right. Interesting thoughts there, Ashwini, and good of you to share them with us today. Thanks so much for taking the time out and being with us. Appreciate your time.
You're welcome. Thank you.
That's Ashwini Agarwal of Ashmore with his thoughts. The market's in the red, down about 1/3%. The Nifty Bank down about 0.5% or slightly over 0.5%. Equitas is the top loser, but mind you, Somani Ceramics is down about 20% as well. So from the broader end of the spectrum, those are the 2 stocks that are making the moves. All right, 20% down for Somani, 7% or 8% down for Equitas, and autos as a pack is cracking under pressure today. Market breadth though on the Nifty slightly better than what it was at the start. Take a break. On the other side of the break, Gautam Duggad of Motilal Oswal joins in to talk about his guide to valuations in the Indian markets as the battle between bulls and bears shows no signs of a ceasefire. And we'll get more clarity on Equitas' plans after RBI denies granting any extension to list its small finance bank with MD and CEO P.N. Vasudevan.